Good day. My name is Dr.Suresh Rama, Head of Rates and FX Strategy of the Economics and Market Strategy Team, RHB Group. In this podcast, we shall discuss the outlook for 2021. Our belief is the dollar will surprise to the upside. We believe market expectations of a continued V-shaped recovery in global economic activity and risky asset prices are likely to be disappointed in the first half of 2021. We do expect modest improvements in global economic and market conditions in second half 2021. We believe the current euphoria in global financial markets is ahead of economic and policy fundamentals, as well as timeline for the widespread dissemination of the COVID-19 vaccine. We expect a slowdown in global economic activity in first half of 2021, followed by a modest pickup in growth in the second half of 2021. We expect 2 to 3% strengthening of the dollar in 2021, with the risk tilted to the upside. The appreciation of the dollar could commence as early as January or February 2021. The market's view is of dollar weakening in 2021. However, we expect the dollar to rebound. Post-inauguration, the dollar has a tendency to appreciate significantly under a Republican president, but less so under a Democrat. In the case of Biden, we believe an appreciation of the dollar would occur in the first half of 2021 and a gradual flattening out in the second half of the year, which possibly reflects the market needing to readjust US interest rate expectations. Asian currencies, represented by the ADXY index, mainly trade on investors' expectation of global growth in the next 6 months. We expect these expectations to be revised down for the first half of 2021 and thus drive the ADXY index lower. We do acknowledge that other considerations besides the outlook for growth, such as balance of payments, interest rate differentials, and geopolitical risk, are factors which impact Asian currencies. However, in the current market environment, Asian currencies are mainly trading on the outlook for growth in our view. On market positioning, it is at extremes in terms of net short dollar positioning against major Asian currencies. We expect position adjustment towards net long US dollar against Asian currencies sometime in first half of 2021 and as early as the first quarter 2021. In the return space, Indonesian rupiah stands out as well as the Korean won, but the Indian rupee remains the worst performer the past 3 months. The Singapore dollar and Malaysian ringgit remain relatively stable, but the Thai baht and Korean won have exploited FX gains in spite of low interest rate returns, indicating the market is susceptible to any reversal in FX moves for both these currencies. Expansionary monetary policy in Asia is likely to remain in 2021, which means much of the return will be driven by FX. Currencies that are underperforming the past 3 months may be outperformers in the medium term, which implies the Indian rupee could be a pair to be eyed as well as the Philippine peso. Specifically, we are concerned the Chinese yuan may be overly stretched given it has breached two significant chart points, namely the 7 and 6.75 level. While we believe China is first off the blocks on economic recovery post-COVID-19, we remain cautious if the Chinese yuan would have the ability to continue with the pace of appreciation without having an impact on its export sector. On the ringgit, we note the currency tends to appreciate when the net long positions in forwards and futures in foreign currencies vis-a-vis the domestic currency, including the forward leg of the currency swap, increases. While on the other hand, BNM asset holding section of MGS, when it is increased, tends to keep the currency on a soft path. We believe in 2021 that keeping the currency stable and managing market expectations on the term structure of the yield curve remains a key factor that is driving both the currency and bond play. This makes both the carry and return for ringgit attractive vis-a-vis the regional peers. That said, ringgit's rapid appreciation may be too stretched and risks facing a reversal. We believe with interest rates remaining low in the medium term and economic activity remaining slow, the currency could instead stabilize at levels near 410.50 in the second quarter of 2021. Thank you for listening to this podcast, which is the final one for 2020. We hope that 2021 will be better. Stay safe and happy holidays.